Latest Stats SA results have revealed that the country's gross domestic product shrank by 2% in the first quarter of 2020. SA entered into a technical recession in the fourth quarter of 2019, this after two consecutive quarters of economic decline. Now, mining and manufacturing are the largest contributors to the poor performance, with mining recording a negative growth of 21.5%. So to discuss this, we're now joined by Economist, that's Azar Jammine. Azar, thank you so much for your time and a warm good morning to you. I mean, in layman's term, what does this 2% rather shrinkage mean, not only just for the South African economy in the broader perspective, but for the consumer?
Essentially, it means that the economy has been going deeper into recession. In the third quarter of last year, we had growth of -0.8%, fourth quarter -1.4%, first quarter of 2020 -2.0%, which means going deeper and deeper into decline. And the unfortunate thing is, of course, the first quarter encompassed only a small fraction of the lockdown and social distancing, which really hit us only from April onwards in a big way. And so the second quarter GDP figures are likely to be a lot worse, and it means that the average person in South Africa is getting poorer. Of course, we talk about the average. There are those who have been relatively unaffected by what's gone on, but for the majority, an average is some are doing a lot worse, and others are doing partly worse, and others are not doing that badly. On average, South Africans are getting poorer by 2%, or were getting poorer by 2%. When you take population growth into account of 1.5%, it means that the standard of living has actually been declining more by 3.5%. And of course, it will have got a lot worse in the second quarter.
I'd like us just to then break it down into different industries. I'll start off with the electricity, gas, as well as the water industry. How has then this GDP drop affected all three?
One normally segments the economy into three broad segments: what is known as primary industry, which is agriculture, mining; secondary industry, which is manufacturing, construction and electricity; and tertiary industry, which are mainly your services sectors. And what these figures reflected was that your primary and secondary sectors, which are your diehard industrial sectors that are often highly labor intensive, suffered a lot more than your tertiary sectors. If you take your services sectors altogether, they actually showed a slight improvement in the first quarter.
And I just want to talk about this decline. I mean, surely it has to be one of the biggest, if not the biggest, in many decades in South Africa.
Not the decline that was reported yesterday. That decline of -2%, we had an even weaker level of economic growth in the first quarter of last year as a result of load shedding at that time. But it's the prospect of what the second quarter is likely to be that is probably going to be the worst that we will have had in a century.
All right, well, we'll leave it at that. Thank you so much. Economist Azar Jammine just breaking down what this means then for consumers, making mention there that South Africa, or at least a majority of South Africans, will of course be poorer as, of course, cost of living increases. But now,